My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now.
Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramer. I've been one of my friends. I was trying to make you some money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-743-CNBC or tweet me at Jim Cramer. The bears refuse to acknowledge that we have learned our lessons from the Great Recession. Yet a whole generation of people did realize, that you shouldn't take on too much debt, that you should live within your means. You shouldn't recklessly flip houses or create abstruse financial instruments no one can understand. We got it through our darn thick heads that it's a bad idea to take out loans that you'll never be able to repay if the underlying asset goes down big in price. And it's an even worse idea for the banks to write those kinds of loans. Look, people, it is just a fact. We got more frugal in this country. We got less reckless in this country. We got more prudent. The same way that my parents' generation learned not to trust banks for decades after the Great Depression. Listen to me. It did happen. After a sedate day for the averages, Dow gained 31 points, S&P inched up 0.03%, NASDAQ advanced 0.1%. Everybody seems to recognize this sea change in human behavior. Everybody except for the bearish Armageddonists and their saturnine fellow travelers. They refuse to believe that people can learn from their mistakes. That's why they think this whole recovery and this whole stock market, it's a sham, some pumped-up Federal Reserve drama in 3 acts. The slump, the comeback, and now the denouement, where everything goes kerflooey, and we're back to where we started 10 years ago. Yet it feels like something good, to me at least, happens every day in this economy, every single day. Something good that is ignored or judged negatively. For example, this morning we got a housing permit number that was the highest in 12 years. The moment the news broke, well, my Twitter feed, it exploded with people predicting that this number is a sign that we're about to repeat the housing crisis. It was an insanely negative judgment. This is some rational, very good data. I didn't see anyone point out that, thank heavens, the Fed was able to reverse the beating it gave to the economy a year ago. I don't know a soul who noted that it was good news because housing punches above its weight. So the strength will benefit not just the homebuilders and the banks, but also the retailers, not to mention everyone involved in the housing-related service economy, the brokers, the lawyers, the accountants, the people who do the title work. It's all there. This number was a huge force multiplier. It's not a sign that we're headed for another recession, for heaven's sake. It's a sign that we're finally recovered from the last one. When the Great Recession started, do you know that we had 301 million people living in this country? Now we have 329 billion. Well, wouldn't you expect more home building? But the housing permit numbers are merely back to where they were when we had 300 million people. That's after a prolonged period of relatively little new building. I mean, that's pathetic considering our population growth, but people are prudent. People are staying home. People aren't taking down mortgages until they have enough money that they won't return to the couch of their parents. Don't try to overthink this economy, people. Good news is actually good news, not a sign that things have gotten overheated and the end is nigh. And look, it's not just housing. I mean, today Caterpillar's management rang the bell. They came down there, 90th anniversary. A decade ago, the old Caterpillar was what I call a sink-or-swim affair. The company was busy making an ill-advised acquisition of Bucyrus, a mining equipment maker. The new Cat would never do such a dumb deal. CEO Jim Umpleby runs a lean and balanced business. Good balance sheet, no longer hostage to China. And it consistently returns cash to its shareholders via dividend boosts and buybacks. Consistent. Cat learned from the Great Recession. They're not going to lever up to reach for the stars, only to find that the fault is indeed in themselves. Or consider, let's go there. Why don't we just really go there? Let's just go there. Let's go to Netflix and Tesla, the two most despised stocks by the bears. The ones that they hate. The ones that they often call out for nosebleed valuations. Now, for months, we've heard Netflix's domestic signups have been weakening. We saw all sorts of surveys about how this company will be the big loser with so many competitors launching new streaming services. But today, we learned that Netflix has more than 90 million subscribers outside the U.S. and Canada. They've done a brilliant job of creating regional content that's beloved by people all over the world. So maybe Netflix is going to be fine. Maybe much better than you think. Tesla. The electric car maker has been getting some accolades from former bears lately because it's so far ahead of the competition on electrification. People like the darn cars. And its solar rooftop panels turn out to be a good business. In the end, Tesla's an auto company. And the stock's been roaring lately because it's a good automaker. Not on Elon Musk's braggadocio tweets, but on the extremely strong fundamentals and the possibility of some very big earnings not that far from now. What else? Okay, I'm wondering why no one seems to care about the super smart people at Blackstone just bought Tall Grass Energy, a lousy pipeline company. Maybe they saw some value, 10% yield, valued at $6 billion. Pipeline stocks have been total dogs for ages. I mean, terrible. And Tallgrass isn't even one of the best, with pipes from, I don't know, running from Ohio to Wyoming to Cushing, Oklahoma. No dunka. Hey, but you know what? Maybe there's hope for this disastrous group that so many rich people are in. For months, we've watched the stocks of Macy's and Kohl's languish at low levels. Bear after bear has pounded them into submission. Now they're rallying. Why? How about this? Maybe because the consumer's so strong that they're even shopping at those joints. And oh, by the way, and they're returning, remember that Kohl's thing where you can return it to Kohl's and it goes back to Amazon? No, people don't want to focus on that. What they want to focus on is how bad FedEx keeps being big, right? That's what they want. Bad news bears. Just a second. Bad news bears. Oh, there you go. Well, you know, they don't even care that we got a phase one trade deal with China that ratcheted down some of the tariffs. Hey, same goes for even the bedraggled Bed Bath & Beyond. I'm actually thinking of shopping there, where the new CEO, Mark Tritton, broomed many of the old executives. Today, what happens? Stock goes up 11%. Maybe Bed Bath's big dividend is safe after all. Finally, you know what irritates the Armageddonists most? The banks. Yeah, those dastardly banks. Their stocks keep hitting new highs as bulls tiptoe into those stocks with above-average dividends and below-average price-to-earnings multiples. Their cheap valuations and extended hangover from the Great Recession. The bears need Senator Elizabeth Warren to own more stocks so she can blow it out. Not that she would ever own any anyway. Okay, it's not just that there's so much good news, because even the bad news doesn't seem to matter to this market. We just found out that Boeing is going to stop production of 737 MAX because they're not allowed to sell them until the planes are certified. Good idea. Over and over again, we were told that this would be horrible for Boeing, horrible for the U.S. economy. So how much was Boeing stock down today? I don't know. What, 10%? 5%? Maybe it was down 2%. I don't know. 15%? How about the fact that the stock was flat? Yep, instead of fretting about how we could be headed for another recession, we need to understand that we're really only just now crawling out of the long national nightmare that was the Great Recession. It takes a long time to put that kind of dislocation behind you. But even as things keep getting better, well, the bears refuse to believe it. Either they can't accept that people are more prudent than they were a decade ago, or maybe they hate President Trump so much they want a recession so that he won't be re-elected. There are always partisans who don't want to believe the data. But whether you love Trump or you hate him, and I bet you do one or the other, there's no denying that the data's good, and it keeps getting better. Bottom line, you got to stop looking at positive data and assuming it means that the economy's peaking and the world is coming to an end, like it's some sort of Stephen King novel. Remember the one where, like, the earth keeps getting chewed up, and the only place left was, like, in Maine? Anyway, we know what a peak looks like. We almost got one a year ago when the Fed foolishly ratcheted up interest rates. Rookie Jay Powell. Nice guy. This ain't it. No, this is a healthy expansion, even if the Armageddonists simply refuse to believe it. You know what we should do? I think we should go to Norman in California. Norman.
Booyah, Jim.
Booyah, Norman.
As you know, PPL provides power to areas of Pennsylvania, Kentucky, and to almost 8 million customers in the UK. When the Conservatives won the UK election last week, PPL share prices rose sharply and hit the 52-week high today. Jim, in light of these developments, as well as issues related to coal, how do you see the future of the PPL share price?
Other than the fact that I used to pay them fortunes, You know what? I like PPL. I mean, it yields 4.59. It's a good company. I've been watching the Semper, by the way. That's a growth utility. But I'm fine with PPL. All right, now, people, listen to me. Maybe I am too impassioned. Maybe I'm not impassioned enough. This is a healthy expansion. Please don't overthink this economy. Don't let the haters tell you otherwise. Stop going into my Twitter feed, you people who graduated from the Nathan Johnson School of Business, and telling me that's bad if it's good. Oh, man, buddy, tonight, Eli Lilly was extremely tough doing earlier this year. Hey, remember when it was at 70? Everyone gave up on it? But with news that it now expects higher than expected profit for 2020, is it time to circle back to the stock? I'm talking to the CEO. Then, with the stock market indices making all-time highs, are there any bargains left to be had? I've got some, so I'm going off the charts. And why a stock that dropped 55% just yesterday can be a case study in investing in speculative biotech stocks. Ooh, that one will make the bears so happy. Don't make a move before hearing this. And stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.